top three things in my notebook this morning. Number one, China. Number two, Germany. And number three, U.S. equity volatility. So just to hit on China first, there was an economic data point out this morning called industrial profits for China in June, up 17.9% year over year versus up 8.9% in the month prior. Now, since the Chinese, I'm sure, made up that number, it's quite nice. What's nicer is that the Chinese stocks are breaking out with that kind of a headline behind it. And again, we gave you the breakout signal last week. The Shanghai Composite up a huge 2.4% overnight. That's up 6% in a straight line since we gave you the trend signal, the buy trend signal. And again, that's a bearish to bullish trend reversal is what we call it in Hedgeye. Up 6% in a straight line since then, so stay with long China. Second point would be Germany. Do not buy Germany. Again, what we'd need to see in Germany is A, not the consecutive series of lower highs, and B, a close above its trend line. So now Germany is doing the opposite of China. It is now undergoing what we call a bullish to bearish trend reversal to the downside with trend resistance at 97.89. And again, the economic data in Europe continues to deteriorate in terms of rate of change. Now, a lot of people on this call will say from an absolute perspective, European economic data is whatever they want to say it is, but we don't care about absolutes. Looking at the final point here on U.S. equity volatility, the VIX is breaking up from a trend perspective now. 1194 is the breakout line in the Hedgeye model. So again, this is one of the most bullish charts in all of global macro if it can hold 1194, which is the trend line of support. So again, a massive bearish to bullish potential here in terms of trend reversal to the upside. And again, that would not be good for the S&P 500. Something that we haven't been really bearish on is the S&P 500, don't forget, because hedge funds have been shorted. But if we look at this morning's net position, net futures and options contracts, CFTC non-commercial positions, it's the first time we've had a net long position in the S&P 500 index and E-minis in maybe 3 months. And those are your top three things.